Hello and welcome to another update video about Bitcoin on Sunday. I think we are heading towards the end of this move here. The move to the downside currently looks corrective and we're heading towards a new trading week, and typically we see some volatility towards the end of the week, towards the end of the weekly candle, typically when we do our member live stream at 5 p.m. UTC or just after that, the volatility starts to kick in. Let's see if it happens today as well. We've got a very nicely defined sort of trend channel. I think we can draw a bit of a line here to define that channel. We can do that in a little bit more accuracy in a minute, or maybe even a wedge pattern. What I wanted to highlight is in this video, I want to focus only on the short term. In the last video, I talked a little bit about strategy. I talked a little bit about the higher degree scenarios, higher level scenarios. So feel free to check that out if you're interested. But in this video, I don't want to waste any time because we did that yesterday. No, we didn't waste any time, but we spent a lot of time discussing different scenarios and strategy. So here only a look at this pattern. Not much changed as we're heading here into Sunday. It looks a bit like a wedge pattern. You could even call it a bit of a bull flag. I mean, from what we can see now, there is a good chance we get that additional high, but price always needs to confirm. Yeah, there is no guarantee that we will get it. From what we see now, the move up was impulsive here in a third wave. Yeah, that was an impulse, and the move down so far is corrective, which means there's a good chance that a push to the upside could be a fifth wave, and we can also look at targets in this video. However, of course, as I said, there's no guarantee, and as long as we stay below 27,550, I did highlight that yesterday, there is also, let's say, still the downside risk that this is just an overshooting B wave and we are coming down in a C wave. And this C wave could head back into the yellow support area between 23,872 and 21,050. Ideally, it would be between 23,050 and 21,050. Yeah, that would be the ideal target range here for this C wave within a possible wave 2. So the question here is the wave 2 already finished? If it is, then it would have been a very short wave 2. If it's not, then we've got the idea that we could come down in a C wave after an overshooting B wave, or if we get that one more high, it could also be that the wave 1 was never finished and that afterwards we come down in an ABC correction in a wave 2. We would have to adjust the support area then slightly, not too much. I mean, just to give you an idea, what would that mean? It would probably move the area up a little bit, depending on how high we eventually go. And you can see whenever we move targets and the wave gets longer, then also these Fibonacci retracements, these zones, they do extend out as well, purely because that's how the mathematics, how the maths work, right? Because the targets are always measured based on the previous wave. If the previous wave gets extended, those Fib boxes get extended as well. Yeah, and that's sort of the key situation. Whatever happens here, unless we really drop below 21,050, does not impact the overall scenario that we are in an uptrend. Yeah, I would see this as an uptrend. We had 3 waves down, 5 waves up, 3 waves down, 5 waves up. Did explain that in yesterday's video. So trend is up, and even to me, it doesn't even matter so much if we come back into the yellow box or not. If we do, it's an interesting setup, I guess, again. If we don't, then the overall scenario works out in that it's forecasted to still push higher, especially as long as we are above 21,050. And if we go below 21,050, we could be heading back into the green support area, but there is a lot of support left before we head back into a bearish scenario, which would become valid and live below roughly 17,500. I think I need to adjust here the Fibs again, because I did move them accidentally, I think, yesterday slightly. But it's sort of, 17.4, 17.5K. Only really if we go below that, the bearish count will get very, very active and primary. But until then, further upside. And, I did talk a lot about the lazy approach, scaling into support areas And one way of doing it is, again, I just need to highlight that, right, is sort of scaling in with any pullbacks, yeah, in this entire region, because all of this is support, scaling in, buying as we head lower. But then, of course, based on your risk management and position sizing, you need to make sure that you have adequate position sizing, risk management, ideally not leveraged, and then you can scale in, setting a stop loss below the relevant support areas. And yeah, I think that is sort of what I prefer to do. With this approach, you accept that you'll never get your entire position filled, but it's part of the game. If you are a, let's say, mature trader, you have to accept that anyway, because and it's a good thing. I mean, if your entire position doesn't get filled, it means at least that you won't be stopped out, and that the trend eventually, or the trade, goes into the expected direction, right? Okay, yeah, what else is to say? I think if we zoom in a little bit and take a look at this particular wedge pattern channel, I mean, again, there is a chance we get that one more high here. At the moment, I would suggest we do, due to this structure that is evolving here. But bear in mind, this is really only micro counting what we do here, and it doesn't really impact the higher level trend, which is up. So going down, going up in the very short term, doesn't impact that too much. And these scenarios change a lot because they're just a lower time frame. Okay, so be aware of that. So from one moment to the other, they can quickly get invalidated or not. But I did say yesterday that as long as we stay above 26K here, we can be looking for that additional wave up. So we're basically squeezed between support and resistance, because this fourth wave is valid as a fourth wave and likely as long as we're holding above 26K. But the overshooting B wave is also likely as long as we stay below 27,550. So the market needs to make up its mind yet. What you need to know is which are the relevant levels, which I just told you. And if we get that fifth wave, what would be the target? So the target would be, so we take the length of waves 1 through 3, and then I don't have a confirmed low for the fourth wave yet, but I can take that low from yesterday. And then we talk about possible targets for that fifth wave based on the current price action between 28,175 and 21,110. It could, in a more extended scenario, even go to 30,620. But these are sort of some of the key levels that I'd be watching here based on the measurement just of those lower degree waves. If, what else is there? We can also measure it in a different way. Yeah, if I take the subwave structure here, so then we also take waves 1 through 3 and just measure the length of the entire larger wave. And then we see a little bit of an overlap here, and targets here are 28,340 to 31K. So that they are not much different. But yeah, that is my update about Bitcoin. Bear in mind, today we've got the member live stream at 5 p.m. UTC. Today we do a bit of an educational one and talk about Elliott Wave triangles. Okay, that's my update about Bitcoin. Thanks a lot for watching. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.